Thank you very much for giving us the opportunity to present today. First of all, I'd like to apologize for unable to supply cake to everybody. I'm sure you've tasted our product as it is. My name is Sukh Chamdal and I learnt my trade hands-on. I've been in the food manufacturing and retail sector all my life. I've learnt my trade with a family business, which included Indian sweets manufacturing. I've done mass catering and retailing. I founded the cake shop in the family's vacant shop in 2008, and I co-founded the franchise model in 2009 with my partner and the CFO, Pardip Dass. Pardip?
Good afternoon, everyone. My name is Pardip Das. I'm the CFO of Cake Box. About 10 years ago, me and Sukh decided that we wanted to set up this business, and so we co-founded the Egg-Free Cake Box franchise. I've got 15 years experience as an accountant within the food and beverage industry, and I'm a qualified management accountant, and I qualified whilst I was at Starbucks Coffee Company.
Can we have page 3, please, Hannah? The business was conceived in 2008 with a single shop in East London, and I'm proud to say that we operate out of a 30,000 square foot headquarters in Enfield, with additional warehousing and manufacturing in Bradford and in Coventry. As of March 2020, 133 franchise stores. And what do? We specialize in making delicious, high quality cakes for you to come and collect, click and collect, order online or on the Uber or the delivery platforms. All our cakes are egg free, and we offer personalization for no charge while you wait if you come and collect your cake. And as it was shown, we have a very good, strong growth profile. Can we go to page 4, please, Hannah? Here's an example of the cakes that we do, right? They're all freshly handmade. We've got cakes, we've got slices, we've got loaf cakes, we've got cupcakes, we've got cheesecakes. We've got a huge selection on our website to order, click and collect. We've got a very good selection on our delivery platforms, Uber Eats, Just Eats, Deliveroo. Cakes can be personalized with a message either online, you can tell us what you want, or we can do it on the spot in store. We have a large range of cakes for immediate purchase from our patisserie displays. And in fact, what we've done, we've actually created a market. We've created a market to suit the lifestyles of customers. Customers don't want to wait. They don't want to pre-order weeks in advance or days in advance. They would like their product now. So what we offer them is a chance to buy a cake without pre-ordering, come in and take a selection from our store. We will personalize it there and then. And that is in line with our consumers' lifestyles. With Amazon, they want it now. And that's what we provide them. We can provide them a cake from as little as 8 servings up to 120 servings. And we do go on the go, eat on the go, cake slices and cupcakes. And they start from a very reasonable £2.50. And as you can see, loaf cake. So you want a dry cake with a cup of tea, we offer all those as well. If you flick over the page on page 5, I'll just go through a short précis of the franchise proposition. Many of our franchises are multiple shop owners. We will show you that slide later on. Our biggest advantage, which I can see, is that we don't charge any management service fee or marketing levy. So whatever the franchisee earns is theirs. We offer very sociable hours, and there's a very short payback time. Very attractive, reasonable earnings of 82K per average. And our brand is now established. If you go to shopping centres, if you go to high streets, there's more than a chance that you will come across one of our shops. Our website is state of the art. We offer an online ordering system, and we're going to upgrade that to ordering a delivery as well very, very soon. Our franchisees have got a one-stop shop. All they do is place all the order, press a button, it's delivered to their door. The only other bill they've got is utilities and staff costs. So paying the bill is so simple. They don't have to source any products apart from fresh fruit. So we make their life really, really easy. In the next slide, I'll just go through how a store franchise application process works. We have an online application form. Once that application form has been received, we have a minimum amount of information, and if the franchisee looks promising, we will send them a full franchise form, which will include what their financial positions is. If we find them suitable, we will invite them to a presentation at head office. Once they had the presentation and my team deems them or worthy to go forward, they will have a second interview or one-to-one with the directors. And if they pass that, then they will pay their deposit and they go on to site selection. Normally site selection is franchise-led, but we will help them every means to select a site. Once the site's been selected, it goes to legals, and that can take anything between a few months to 18 months. Once we have the keys, we start the store build, and once the store build is going, the potential franchisee is put through a 4-week training program, which teaches them everything about the business, from making cakes to management, to staff selection, to people management. Once the store nears completion, there's a pre-open marketing plan, which is done by our regional business development managers. And 4 weeks from having the keys, we open the doors. If we now go on to the next one, which will give you a précis of our financial highlights. We have an increase of year-on-year by 11%. Gross profit has gone up by 14%. Net cash is up by 1.2 million. Earnings per share is up 4%, and the cash at the bank is up at 0.6 million. The adjusted PBT is down 5%, but Pardip will explain further in the presentation. If we go to the next slide, I can give you the operational highlights. We have our store count has increased to 133 with the addition of 20 new stores in the year, which were complemented by the trialing of 12 kiosks in shopping centres. These are operated as extensions of existing shops with only selling and no preparation of products. We have strengthened the compliance and business development by the recruitment of 4 regional area managers, and they support our franchisees in business development or their local marketing, compliance, auditing, making sure the quality is there. Our Bradford site is now up and fully operational, which along with giving us reduced logistics and road miles, it also gives us a disaster recovery plan. We can continuously continue to innovate and experiment, and we always take note of current trends. We've introduced our salted caramel range this year, and we've also included a salted caramel cheesecake. The caramel sponge cake flying off the shelves. So we're constantly upgrading our offerings, and these are all additional sales to the basic gâteau that we do. If we go into the operational highlights, we've done operational highlights. Yeah, if we go to the franchise operational highlights, sorry. Oh, that's the franchise, 19% increase in total turnover by our network of franchisees to 36.5 million. with average store sales hitting 6.3K per week. With our online sales increasing again, this time by 25%. 5.1% increase in our like-for-like just before the COVID-19 impact. So this was measured just for the last 49 weeks. We're happy to report that more franchisees have become multi-site operators. The franchisee continues to enjoy a healthy 82K EBITDA. If you flip to the next page, we can see that we have still got lots of gaps across the country. A lot of opportunities are still available, such as Scotland and Wales. We are still underrepresented in the northeast, the southwest, and even in South London. Greater opportunities also exist in the kiosk format. Lots of shopping centre operators have been in touch with us, asking us to come to their stores. And the kiosks, some of the kiosks are performing as well as a store. I'll hand you over to Pardip for the financial review. If we can go to the next page, Hannah. Thank you.
Thank you, Sukh. So if we go into the group income statement, we can see that turnover has increased by 11%, and that's despite losing 3 weeks of trade in March. So turnover's gone from 16.9 million to 18.7 million. We've also had improvement in our gross margin by just over 1%, and that's been achieved through greater sales in sponge, where we make the highest margin in the sales of sponges. Our administrative expenses have gone up considerably this year. We've had quite a number of step costs, one of them being the recruitment of 4 regional business development managers, which Sukh went into in detail. I think that's really strengthening the business going forward and investing in our people and protecting the brand. We've also had 2 additional warehouses which we fitted out, and obviously we've got the establishment costs for those warehouses this year. And because one of them is not fully operational, we haven't been able to really get the improvement in the logistical cost saving that we had hoped for this year. And don't forget, this year we've also had a full year of PLC costs compared to 9 months worth of PLC costs in the previous year. So all in all, our profit did go up 4.2% to £3.1 million after tax. If you go on to the next slide, group balance sheet, we've strengthened the balance sheet further. Fixed assets have gone up 42% by £2 million, and that's because we had a revaluation of our Enfield warehouse, which had an uplift of £1.4 million. At the same time, our debt is coming down. We managed to repay £500,000 loan facility in the year, having sold one of our old warehouses, which we didn't use. So all in all, it's strengthening the balance sheet, bringing our debt down. And if you go to the next slide, have a look at group cash flow. We've paid a lot more corporation tax this year as profits rise year on year. And we've spent a lot less as well in terms of capex. We spent nearly £2 million purchasing the freehold properties in 2019, and the fit out this year has cost us £570,000, which is only 3% of our total turnover. So we're living up to the promise that we're a capex light business model, which people have invested in us for. We've increased our dividend to shareholders by £600,000, and even with that and paying off one of our loans as well, net cash and cash at bank has gone up £600,000 in the same period. I'm going to hand you over back to Sukh. He's going to talk about the COVID-19 effect this year.
Sukh, we can't actually hear you. Can you unmute your mic? Thanks.
Even though we're not legally obliged to close, we felt a moral duty to protect our staff, franchisees and customers and contribute to the reducing pressure on our NHS. Our franchisees utilised all the help that was on offer during the crisis, and we are confident that they will emerge already for the bounce back. Head office took all steps to mitigate costs wherever possible, such as stopping the marketing. I'm glad to report that we have a strong balance sheet and liquidity despite the store closures. Given the support of the UK government has given to the group during the crisis, the board decided it would have been inappropriate to utilise cash resources for anything other than protecting the financial strength and resilience of the business. And even though we did have money in the bank, we would have had large cash burn if we didn't have the help from the government. If we go to the next slide. A short timeline in response to COVID-19, after the government announced the lockdown, in conjunction with the views of the franchisees, it decided to close all stores as soon as it was practical to do so. We closed the operations at our facilities, and along with our franchisees, we distributed thousands of cakes made from the stock that we held to frontline staff, with the majority going to the NHS. Weekend 3rd of May, we did start doing planning. As soon as we closed, we started planning what we're going to do for reopening. So we had placed orders for PPE, face shields, sneeze screens, masks, sanitizers, instruction posters, and face screens, plus tape for the floor to make sure that all our staff and our customers were safe. A phased reopening was put into place, proceeding with click and collect and collection at the front door with no access to the shop in phase 1. Going on to phase 2, we restocked the displays. Customers were allowed into the shop with strict social distancing, clearly marks on the floor where they could stand. Same with the staff in the kitchen. We had reduced staff with clear social distancing. The total number of shops in phase 2 rose to 86, and by 18th May, the third phase, 131 stores had reopened. If we go to the next page, I'm happy to report, encouraged by that there was pent-up demand over lockdown, has already resulted in about 75% of our stores are now trading at pre-COVID-19 lockdown levels. This has resulted in production resuming in both of our facilities, and like-for-like sales are normalising as we emerge from lockdown. I'll hand over Pardip just to conclude the presentation.
So where are we at the moment? So as of yesterday, we had 131 of our 133 stores opened, and from today, I'm happy to say that all of our stores are open, including the kiosks. In that time, we've also partnered with delivery platforms such as Just Eat, Uber Eats and Deliveroo to offer our customers a home delivery service. And because that's been proven to be quite successful, we've put further investment into our website and launched delivery service from our website as well, which is at the moment being planned to take effect within July, I believe. Since the lockdown, we've opened 2 new stores, one in Swindon, one in Hemel Hempstead, and we've got a strong pipeline of new franchise stores. We've got deposits for 24 areas and also interest from our existing franchisees who are always looking for their second, the third store. We're happy to say that we've had a really good kiosk format in shopping centres, and so we'll be looking to roll that out further because of its success. So to conclude really, on the next page. Next page, Hannah, thank you. No, one before. So we've got a proven track record. You know, we've had record sales this year. Our like-for-like sales were very good just before we went into COVID. They've come back strongly in the last 2 weeks. We're seeing like-for-like sales around the circa 7% mark. And we've got significant scope for expansion. You know, we mentioned the kiosks. We're always looking at new products that we want to launch. And we've still got limited direct competition in the UK, which puts us at the forefront. And we've got strong credentials. Our investment is funded by our franchisees, and we're always going to be a low, light capex model. Thank you. We'll welcome any questions.
Super. Thank you, both of you. And we have plenty of questions coming in. Why don't we start with one sort of big picture market size? Couple on this. First of all, you know, what are the total addressable outlets that you think the UK can accommodate? And more specifically, how many do you see yourself opening in the next year, full year 21? And out of them, what percentage will be done by existing franchisee owners?
We are aiming for 250 stores within the next 5 years, and we are aiming for 18 to 20 stores this year, plus kiosks as much as we can get. And we strongly encourage our existing franchisees to expand. And we've got 12 which are multi-site. We've got 14 who's got more than 3 to 8. And all our franchises are constantly expanding, but we've got a very strong pipeline of new franchisees as well.
Okay, well, let's take on from there. We've got another one here is asking, in order to attract new franchisees, are you having to re-engineer downwards the initial site investment or change the financial model in order to allow them to make a return?
No, we're not, because the franchise is exactly the same. And we believe that we're very, very reasonable out in the market. Our franchise setup cost is a turnkey package, 135,000 plus that, ready to trade. And I think we're one of the cheapest on the high street.
Mm-hmm. Okay. So with sort of sales, say at 330 per store and 140 going to Cake Box, leaving 190 for the franchisee, that leaves sort of 82,000 in EBIT and 110 for staff costs and premises.
Got it?
Yeah, well, the figure that you mentioned there that's going to us is the franchisee's cost of sales, which is our sales, and that's not our profit. But at the end of the day, the EBITDA that a franchisee gets has been calculated at £82,000 as an average. So they've got very, very good returns as a franchisee. And we're very ethical. We're always looking at the split between the franchisor and the franchisee. And we believe that we've got this figure absolutely right. We're very ethical. And that's the reason that existing franchisees are returning to us. You know, some have got 8 stores. There's a consortium of 3 franchisees that have got nearly 20 stores. So if our business model and our split between our profit between our partners is spot on, and that's why we're attracting our existing franchisees to come back to us.
No, a strong endorsement. Right, okay, well then here we are. Here's an example of 2 franchisees living next to each other, but a gentleman asks, in the area I live, there are 2 different franchisees within less than 2 miles radius of each other. And for the special cake slices, they charge different prices. Why is that possible?
It depends on what design they've made, what toppings they've put on, because all our slices are not exactly standardized, right? We do allow a little bit of freedom for the franchisee to exploit the demand in the area. So we find that in some areas they'll sell a lot more fruit slices, some areas they'll sell a lot more chocolate slices, and they want more chocolate as well. And even in a short radius of even 2 miles, right, you'll find that there's different tastes. And so that's why there might be a slight variation in charging, but it would never be over the maximum price.
Mm-hmm. Mm-hmm. Well, okay, so if we know that your cakes are egg-free, that's a big selling point, but we can't be considered vegan because obviously they're filled with lots of lovely fresh cream. So in terms of your customer base and who you think your target market is, could you perhaps spell out for the viewers, you know, are you focused very much on the egg-free, the Asian market, or are you breaking out beyond that?
We are spread geographically from Southampton in the south to Glasgow in the north. We've got shops in Aldershot, Ashford, Portsmouth. So we started off as in Asian areas, but as we expanded, we've gone into non-Asian areas, and we're in a lot of the shopping centres. For example, Harlow, Bishop Stortford, we're in Rumford. And so it's the actual taste of the product, not the actual cake or the egg being missing. As a matter of interest, or latest study has shown there's 1 in 20 children suffer from an egg allergy. That's up to 20%. That's up to 650,000 children who cannot eat egg. So we have got a double advantage by removing the egg. And we was also mentioned about vegan. We have perfected a vegan recipe. We've found a very suitable vegan cream. So we will introduce a vegan range in the near future as well.
Excellent. Something on the cards. Well, obviously you're developing your delivery model rapidly with those 3 signings that you mentioned earlier. How well do I guess how well do the cakes transport is certainly something that some listeners are interested in.
Originally, we were dead against delivery because of the delicate nature of the cake, but going onto the platforms and with the onset of COVID and everything going delivery, we had actually designed a packaging to keep the cake safe. And we researched that and developed it just before we got the delivery, just before COVID. So we were fortunate there. It's been a learning curve, and we have to educate the drivers of the platforms that this is a very delicate product. And we've done that, and it's improving every day. Or a lot of the franchises deliver themselves, and we use taxi firms as well for the delivery, which is in a vehicle, so it's a lot more safer.
A bit safer than bouncing around on the back of a motorbike.
That's correct.
Many people are obviously interested in the dividend. Now, by taking the government money, you were stopped from paying a dividend. So, you know, can you give us again, I think you did mention earlier, obviously, the cash burn that the group would have suffered if you hadn't taken it, but perhaps worth reiterating the point as to why that, you know, why that was taken when you had cash in the bank, and how you've now been prevented paying a dividend.
Got it?
I think morally, it wasn't the right thing to do to pay a dividend, but we also appreciate that our shareholders have invested in us because of the dividend. You know, right from the start when we floated, we did pay quite a good dividend. So we will return back to that model, but it was absolutely, you know, not the right thing to do to pay a dividend. It wasn't appropriate to pay a final dividend at this venture.
Fair enough. Now, I guess people are interested in long term, and we've spoken to market size. But in terms of your ambitions, you know, is it to grow to be the next Domino's of the cake world? And perhaps to that point, who would you see in the barriers of competition to somebody catching you up and also rivaling with you to take over the space?
Well, obviously we're not as big as Domino's, and
not yet.
I think just being in the UK, we will probably never be as big as Domino's. But you know, look, we said we're going to do 250 stores. We've opened up a new avenue in terms of the kiosks. We could be in probably every shopping centre in the UK, and the only restriction to that would be what rent we're going to pay. But I think there's still a lot to do. I mean, 250 sites is still about 4 years worth of work for us. So, you know, short term to medium term, we've still got a lot of work to do in the UK before we start looking at where we want to expand. But is it going to be overseas? Is it going to be master franchises and new territories? Or are we just going to go the organic route and develop new products? But until we saturated the UK demand, we've got other avenues we can go down.
And competition in terms of barriers there?
I think we're streets ahead. In the 10 years that we've been around, nobody's come close. They've seen what we do. We're a good brand, but nobody's replicated it. Nobody's tried to copy it. And so we're streets ahead, and we've got no direct competition. So I'm not sure how long it will take for someone to catch us up. I think a very long time.
First move advantage. Just on the specifics of shopping malls and shopping centres, how much are they going to take up of the 250 you talk about? What percentage do you see them contributing?
That's in addition. So the shopping centres are in addition to the 250 high street locations that we've identified. So that is extra stores really.
Okay, fine. Just you obviously touched then on your ethical stance, and what percentage of waste are you seeing from the cake shops every day, and is that managed by the franchisees?
We are set up in such a way that we sell one cake, we make another cake. So if you made the cakes at 6 p.m, right, they're good for selling the next day as well. We have very, very little waste. That is because of the way it's managed. The sponge has a life of 3 weeks, and we will only make 2 orders. So if there's a cake missing in the display, we will replace that. We'll find that cake, it turns over 3 or 4 times in a day. So there's hardly any waste at all.
Okay, that's good to hear. Now, I'm just working through these questions. We still have a lot to go through, some of which you have already answered. But you mentioned that 75% of stores are trading now at pre-COVID levels. What about the other 25%? And can you give us a bit more detail about the cash burn since the end of March and for the rest of this year?
Yeah, certainly. So 75% until last week, 75% of our stores were trading at pre-COVID level. Some of the stores opened later, so we had a phased opening of these stores. So they're playing catch up on that, and we've had another really good week this week from the sales that we reported today. So that figure will go towards 100% by the time we get to end of June. And we were really fortunate that we were able to open our shops back quicker. And our cash burn of £200,000 was just in April. And because we opened our shops in the commencement of May, our cash burn obviously then went a lot lower. And happy to report that our cash at the end of March was 3.7 million. And we're already at 4.3 million. So you can see how cash generative this business is and how quickly we can turn things around.
Okay. I guess that means that the dividend remains under review for the long term. Have you got any thoughts you would like to share with the market at this point and on its return date?
Well, we've got progressive dividend policy. It's a shame that we wasn't able to pay a dividend, but the shareholders will get rewarded in due course.
And you will make by not paying that dividend, we've protected all the financial position of the company, and we hope to come back stronger.
Now, obviously, by presenting today, you've already proved yourself open and transparent to engagement with a wider pool of investors. But just got a few questions around your government's arrangements to ensure that minority investors are treated fairly, given the high ownership by yourselves, the founders. I mean, you've obviously got a strong cash position at the moment, but if you were to think about equity raises and so on, would you be open-minded to bringing in private investors?
Well, we don't need the need for new money because, like I say, we are a capex-like model, and so even when we floated, there was no new money introduced into the company. the way that we can bring in private investors or new investors is going to be through some form of share sale from ourselves. But we're very passionate about the business, and that's why we've retained 50% of the business. But you know, we never say no. There'll always be an opportunity for a sell down at some point, and to fill that demand that people want.
Okay, good. On the point of franchisees, do you see any of them struggling at this time and needing additional support from head office?
I think the government has been more than supportive. Franchisees have had it quite easy, actually, because they've not had to pay any rates this year. Some of them have had grants up to 25,000. Nearly all of them had at least £10,000, and they were closed for a short period of time. So we're quite open with our franchisees. We offered to help them. We've offered lifelines if they need it, but nobody has come to us asking for any additional support.
Good news, good news. Well, I think we shall leave it there. So thank you both for your time today. And if listeners would like to watch it back, we are recording it. We'll upload it later. And as I say, there is a note that we published today up on our website as well. Otherwise, we look forward to speaking to you both in 6 months' time.
Great. Thank you very much. Thank everybody for their time.